Hey everyone. So I'll give you a sneak peek on the stock market. Now we all know that the stock market tends to go down closer to the winter months, closer to December. And my goal, as always, is always to invest about seven grand right before the start of the year. This year I was being a little bit more proactive. I'm investing a little bit earlier, so I'm doing things a little bit different. I've already put in about half of that. And what I tend to see is that it'll go down a couple $100 every day. Sometimes it'll go up a couple $100 in a day. And what I'm here to say is that you know there might be more discounts in December, as there always is, but I am just excited to be able to get any type of discount because I understand that the run up in the housing market is going to be even better. The run up is going to be even better because one thing that you should know is that when there is a government regulated inflation, and what do I mean by government regulated inflation? That means when people are forced to raise their minimum wage, whether it goes to restaurant workers or state by state legislation, eventually people are going to have excess income. Even if the average excess income used to be $100, one day it will be the new $1,000. You hear older people say all the time that when they started in the workforce, minimum wage was $2. Now in most places, minimum wages are at least $11 to about $17 or so, if I'm not mistaken. So with that type of increase, about 5 to 6 times of increase, you can understand that if the average person used to save about 25 cents, now the average person saves about $100, then 10 years from now, the average person will be saving $500 or $1,000. And so it's just natural to understand that in the stock market, if you're buying great performing companies, great assets, great ETFs, that over the long term, you're going to profit just off the simple fact of inflation alone, right? Not to mention the historical averages of 7 to 11% returns. And so I'm already used to surpassing 7 and 11% returns to where I'm getting 18, 22% returns. Granted, a lot of this was during the last 7 years where we've been in a bullish market the whole time. What is a bullish market? For those of you who don't know, a bullish market is when everything is good. Everything is going well in the financial markets. And so everybody can seem like a genius. Everybody can seem like a winner. Now is the time where we're going into a bearish market, where we're headed towards a recession, where stocks are crashing, and we have to understand, am I still going to be able to perform the way that I did? Am I still going to be able to garner 18, 22% returns? Or will I be limited in my assessment? Well, even if I don't garner 18 to 22% returns, I don't anticipate having a negative year ever. Because the companies that I invest in, I believe will always be profitable all the time. Now, there are companies who might have 1 or 2 bad years, but because I have 29 companies that I invest in, I understand that I'm supposed to be on top with the studying that I do, with the knowledge that I have, and with the education that I continue to improve upon. So with that being said, understand that what my understanding of the stock market is, it's more emotional than real estate. So if you just watched my last video on housing market crashes, this is about stock market, and it's very, very, very emotional. So things can change at the drop of a hat. If someone was to say Facebook no longer supported LGBTQ, it would crash by about 5 or 10%. Or it might go up 5 or 10%, depending on the demographic of people who are investing in Facebook, right? So again, it's very emotional based. But it may not even have to do with the business model itself. It may not have to do with how profitable it is. It may only have to do with whether or not they like the company and what it stands for. Some companies are literally built off of who they are rather than what they do. And so I focus on the what they do because that's what's going to keep them around long term. That's what's going to continue to make money. And that's what's going to continue to have people spending, right? And then you also have to understand, is this company capable of beating out every other company? Are they doing things differently? If you look at Bud Light was wiped off the face of the earth for the stance that they took. But the true question is, did they do anything different in the industry to stop that from taking place? No, they're just another drink company. And if you rub people the wrong way, you can be taken off the shelf, right? If you're not profitable, you can be taken off the shelf. And so something like that is just, it just allows you as an investor to assess your portfolio and say, is there another Starbucks out there? If not, okay, Starbucks is great. But if Tim Hortons is a valid competitor, if you believe that Tim Hortons can be more of a sit down and eat and social gather and have interviews type of place, then we might have a problem. We might have some competition. But if you believe that there is no other entity or business like that, then this business is good to go. And so it's up to you to make those determinations and understandings, but also to not be fearful of a stock market crash and go in there understanding that I can make a ton of money. You see, that's another thing. I don't want to really switch topics into savings, but right now savings rates are at 4.5%. And dividends in my stock market is about 2.13% after expenses. So I'm looking at a 2% less dividend incentive to invest in stocks right now. But why am I still investing in stocks? It's because I want the appreciation that comes from long-term holding. I want the compound interest that comes from that as well. And I want to get these companies while they're cheap so that when they do go on the rise and when they double in price, I am already in there. I am already reaping the benefits of all of the patience that I exhibited throughout the years, right? I do believe Tesla in 10 years from now is going to be worth far more than what it's worth today. I do believe that other companies are going to be worth far more than what they are today. And it's incumbent on me to not just follow the masses and to invest when everything is low so that I can get to where I need to be and so that I can be who I want to be, which is wealthy, very paid, financially independent, and retired early. And so if you like this video, make sure you leave a like, comment, and subscribe. You know I post every single day at 8 a.m. daily on YouTube and on Rumble, and I can't wait to see you on the next one. Peace.